Hey guys, Mike here. So happy Friday, and monthly OPEX is in the books once again. $2.2 trillion, I believe, in options expiring today, and that's why you see a whole boatload of volatility. And at the end of the day, if you didn't get to see it, that's why you saw shorts covering before going into the weekend with that little short rally up before we turn back negative again. But at least the Russell had a decent day. But we got news from all over the world coming out, just piling on, right? Trying to push the markets down and stuff. And we'll go over a little bit. At one of them especially, I always tell you, watch in these kind of instances, watch what perma bulls say, right? If they come out with something negative, pay attention. So I'm going to show you one of the perma bulls that came out with something and kind of cryptic. So we'll get your thoughts on that stuff. Some other stuff coming out of China, and then I'm going to show you something that maybe either put you at ease or make you go, uh-oh, depending on how you position and stuff. And then I'm going to show you a Tesla chart you definitely want to see, okay? So, first, obviously, all kinds of negative news coming out about China, right? And so when we look at this right here, this is by far one of the most bearish charts you'll probably ever see, but this is China's HY Real Estate Total Return Index, and boy, oh boy, I mean, that is just a hot mess, down 82%. And it's amazing to see just how bad it's gotten over there, how long they've actually been able to hold this up. But, here was Tom Lee coming out right here, and he gives this point down on his Twitter account, and this gentleman come out, and I'm just going to read this to you because what it basically says is China's state-owned property developers are warning of widespread losses, fueling concerns that the housing crisis is expanding from the private sector to companies with government backing. 15 out of the 38 state-owned enterprise builders listed in Hong Kong and the mainland reported preliminary losses in the 6 months ended June 30th, up from 11 that warned of full-year losses in 2022. And then when you look down here, the warnings signal state builders are no longer immune from the 2-year housing slump that has weakened the economy and triggered dozens of defaults by private peers, with speculation that Country Garden may be next, which of course we know they are because they filed bankruptcy yesterday to try to protect assets. It also dims the ability of SOEs to support the market by taking over incomplete projects to ensure they are delivered to home buyers, which is what basically has been happening. And what was interesting though, when you go back to his tweet, somebody came down here and asked a question. This gets worse. Is Fang a good hiding place? And he says, rising rates equals bad for tech stocks. And I'm like, well, that's weird, right? Because, I mean, obviously rates have been rising all year long. And so I don't really get that. I don't know if he's trying to be sarcastic. Don't really know the guy's humor or anything. But let me know what you think down in the comments and stuff. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. But here's the insane part. I actually sat here and did a video on Evergrande and the Chinese real estate market. Did 3 of them actually. Back in 2021, I thought it was a year ago. It's actually almost 2 years ago now that I did those videos. And that country has been able to absolutely either mask it, hold it up, prop up the market as much as they can. But that's the difference. Like what I say is I don't know how China works because it's run by a communist government. Like literally, if they don't, like the other day they told the banks, don't sell any more stocks. Like, can you imagine if the president here came out and whoever he was said, you're not allowed to sell any more stocks? Like, can you imagine that? He told them, like, when Evergrande started happening, he literally came out to the banks because they own the banks, because start lending, keep lending. It didn't matter because it's state owned, right? And so it's like, that's what I said when I did the video. This can go on for a long time, and here we are. It's going on for a long time. And people are worried about it being the Lehman moment, right? Here. Just showed you yesterday, but when Lehman went under, that just rocked the financial markets and stuff, right? And so, again, the problems were persistent in 2006. It took 2 years for it to actually just finally go over. The difference is, in our country, we just go in and we take taxpayer dollars and we bail them out, right? Now, we let Lehman go under because they didn't realize how bad it was, and then all of a sudden they went, whoa, what were they doing in China? I don't know. I can tell you this much, and I don't even say this jokingly. If I'm the CEO of any kind of building company over there or anything that could make the president or the Communist Party look bad, I'm transferring all my funds to some Cayman Islands account, and I'm getting on the first jet tomorrow morning and getting out of there. Because wasn't it Jack Ma or somebody that disappeared for a while and he came back praising the government after you've been railing on them for so long, yeah, I'm out because yeah, brother, you're in trouble, right? I think they all know they're in trouble. The question is, what's the government going to do? And I don't know. I don't know how they're going to react because remember, you're talking about a government that literally destroyed the tech sector. I mean, literally just nuked it, right? And so I don't know. Your guess is as good as mine. Put it in the bottom. But it's crazy because this stuff, it's been going on for so long. Now all of a sudden, what I tell you, it's not a coincidence that all this stuff's coming out all of a sudden. And as soon as the market shows some weakness, right? It's how you get the market pushed down. Okay, it's how you get it. How the market's going to perceive it. How long it's going to keep going down. That's the big thing. What's the next shoe to drop? That's the other one, right? Is there one? So you know how the market is. And so looking at and of course I'll have a video come out Sunday, send it for next week. But next week there's just I mean, there's so many landmines, it's crazy. And we'll go over them in that video and I'll show you what I'm talking about. Now, I thought I showed you this to you guys, but I don't think I did. And I went back and looked. And remember, I apologize, but I do 2 members videos a week and then I do 6 for you guys. And so I actually put this video out preparing the members for August, September. And this is the video called Charts That Show What Really Happens in August and September. Okay. And so what I'm going to do literally in rapid fire is show you in less than 60 seconds what August, September looks like going from 2010, when obviously the government owns the market, right? And they still own it, to now. Okay, so you can look at this and understand, I know there's a lot of stuff going on, but this is not abnormal. Okay, even when stuff isn't going on or what you're seeing right now. Let me show you. And you can judge it for yourself. I just give you the information. But this is 2010, August. Going into September, look at that. Boom, not good, right? 2011, August, September, not good, right? Going 2012, not bad actually. Actually went up 3% in 2012, and I'll go ahead and tell you right now, this will be one of the few times, actually 5%, this will be one of the few times you see anything positive in these 2 months, okay? 2013, big move down, bam, boom, back up, so basically 0, right? So there's gonna be rises and falls. You go 2014, what do you see? Big move down to begin, come back up, so now we're break even, trade sideways, then sell off in September again. Go down 2015, disaster. I forgot, something happened here. I don't know if it was a debt ceiling thing or the government shut down. I don't know what this was. But again, seems to always happen in August, September, okay? Here's another one, boom, not good, okay? Go down 2017, same crap, right? I mean, look at this. Like August, September are a hot mess. You go over to 2018, actually a good one. And the reason why I think it was good, because what preceded it? A 20% crash. This was right before the October into December crash of 2018. So wasn't that fun? Then you go into 2019, once again, dumpster fire, right? August, September. Look at that over there. It's a roller coaster. You go into 2020, they're pumping billions into, or actually trillions, into the economy. August, okay. September, not good at all, right? Then you go in 2021, another dumpster fire, August and September. Actually, August wasn't too bad. I mean, it was basically 0, really, what you got. But then when it's all said and done, going to September, not good at all. Another roller coaster. Going to 2022, where here we are in a bear market rally. Bam! August, September hits, just an absolute dumpster fire. And then here's now. Okay, here's where we're at. So just understand, even in good times, when nothing's going on, when China's real estate market's burning down, when rates aren't, what are they now, 5 whatever percent, quarter, whatever it is, and I'm talking around the globe, they're raising rates like crazy. All this crazy mess is happening. August and September, man. It's like, to me, I look at these 2 months now, and again, I put this channel together for a reason, and you can use this going forward now. You should know, like, oh boy, August, September, from here on forward, I might want to be careful how I'm going to be positioned or whatever. And so just keep that in mind. But even when times are good and rates are 0 and the government's pumping money in, these 2 months are just rough. They're just rough. They're a roller coaster, right? And so I just want you to see that, so you're not saying, going, wow, is this abnormal? No, it's not. Because I know, look, I don't care who you are. If you got long-term positions, nobody likes looking at their portfolio every single day going down or something. It's not a fun thing after you just watched it go green for so many months, right? So I always say, just don't even look at it if they're your long-term positions, but unless you plan on dollar cost averaging in and stuff. But so I just want you to see that and understand. Again, I will have a note in my notebook to my son that says August, September, not good. Right, so the odds are not with you. All right, so just keep that in mind. Now, going into some crucial charts. One is Tesla. Understand today, obviously, so we're talking about $2 trillion or 2.2 trillion in options expiration. around 1.5. It's linked to the S&P 500. And I was actually looking at this. I've never tracked this. I don't know if you have, but this actually shows you how much actually expires in the AM and how much expires in the PM. And if you look, I was wondering, I had a feeling, I wonder if it's going to free the market up after noon to actually just move up some, because I know a lot of this is going to be bearishness. And that's exactly what happened. Like, we ended up red, I believe, for the day, but it actually it came up quite a bit from where it was at, starting around 11:30 when a lot of these had already expired and stuff. And so that's interesting. I don't know if you ever tracked that, but now that leads me into Tesla. So this chart right here, I created for the members, I'm going to share it with you too. Understand, this goes back to 2021. This level, which I've showed you right here, you can see it's around 208 to 210 area, somewhere in there. But you can see all those arrows are either bounces off the support level or resistance. Okay, so it's a strong level, right, for Tesla. And understand there's a lot of confluence here, because you got that gap right there. You got that upward trend line that's bounced off of 3 different times, right? You got the golden pocket on the retracement coming down. And then, of course, you have a strong support level. So there's just a lot of stuff going on in that area. And what this tells me is, obviously, it's primed to get either a short-term bounce or whatever it's going to be, long-term, either way, a bounce. But if it falls through that area, that just shows you how much selling pressure is going to really on the stock. Plus, the RSI is hitting oversold and stuff. But, you know, so if it falls through that, being sub 200 is definitely heavily in the cards, right? And so just keep that in mind. So this is what this chart tells me. Now, looking at BABA, it got sold off again today after that stuff came out by Evergrande filing bankruptcy and all this mess. And you can see it got on that trend line, kind of bounced up, got a reprieve there. But again, it's just one of these stocks. If it falls to that trend line, you're definitely going to see way more negativity going on. But again, you know, we'll just have to see what's going to happen, because you never know what's going to come out of China. At this point in time, I'm expecting them to come out and say, hey, we're going to do whatever it takes and all this good stuff. And the market's going to go, yay. But there's just a lot of money pulling out of China right now. And because it's just risky. I mean, it's really risky, because 70% of their wealth is tied up in real estate in that country. And so if that real estate market can't get back on track, it's just going to be a rough next decade or more for that country. Now, as far as short term, again, the algos are trained to sniff out any news that says we're going to go ahead and, you know, have any liquidity in the market and all that stuff. It tends to love that. And we're at a level of support here, you can see. So if it's going to be a bounce, it better be now. Okay, just keep that in mind. When you go over to PayPal, this is another one right on that trend line we talked about. It got down to, what was it, 58 something. Got that bounce. And you can see these bounces are identical. Look at this thing being oversold on the RSI on the daily. You go over to the left one, what was happening? It was oversold on the RSI on the daily. It bounced. And then if we scroll up even farther, you'll see another one where it was absolutely the same thing. It's oversold and it gets the bounce, right? So, you know, this one, again, a lot of selling pressure. We'll see, you know, has that gap. We'll see if it can continue that bounce. And lastly, there's Shopify, which I talked to you guys about. It was right above the gap when we talked about it. I said, we'll see if it fills the gap. It'd be really smart to do so. And there you go. So now it's starting to fill the gap. And you can see that is a prime level of support at the bottom of that gap right there, between like 48 to 51, somewhere in that area right there, because they don't always fill the whole gap, but gaps can actually support and stuff. So just keep that in mind. Again, it's sitting there oversold on the daily. And in Sunday's video, I'll definitely show you something that's going on in the Qs to be very aware of, and a couple of them, NVIDIA being one of them as well, on the chart itself. And we also know, you know, we'll go through earnings stuff, which NVIDIA has next week. We got Jackson Hole next week. You got a whole bunch of stuff. That's what I'm saying. You got landmines just all over the place and stuff. But, you know, monthly OPEX is done. Sometimes the market, well, not sometimes, all the time. Now the market is almost allowed to move in a freer way, right? Because now you got $2.2 trillion in options gone to the wayside. And so is that way going to be up? We're going to have to see if we finally get this, you know, a short-term bounce at least, a relief bounce or not. All the charts line up for it. But again, you know, the market maker is going to do what they want to do and stuff, because a lot of these stocks, man, they are definitely, especially the mega caps, I mean, they are definitely at levels where you're like, oof. And some of them got bounces today off key levels. AMD did. I showed you yesterday. It bounced right off the key level we talked about. And so, again, we'll see what happens. And remember, like I told you, August is rough. September is usually rough. It ain't going to be straight down, though. So just be prepared for that and stuff. and buckle up. And so I'll end up seeing you guys tomorrow. We'll go over, obviously, any questions, comments, all that good stuff for those who like to watch that. And then Sunday, we'll set you up for the week and everything, okay? So please hit that like and subscribe button. That's all I ask. Really appreciate it. If you want to join the membership and stuff, get private videos, all that good stuff, hit the link down the bottom. It's less than McDonald's combo, and you get a 7-day free trial. So if you don't like it, cancel. All right? Anyway, see you guys later.